today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 15th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Just let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got a mixed bag out here. Dow and S&P are up 165 and 20 points, respectively. The NASDAQ is off 45. Russell's up 44. That's 3% to the upside. Big move there. Semis are back 19. New York Stock Exchange up 158. Wilshire's up 259. That's 1%, 8%. The trannies are up 2 3/10% out there. Spot volatility still below its 50-day exponential moving average. That is always bullish for the S&P 500. Gold's up 80 cents. Silver 26 pennies. Light sweet crude is up 63 cents. As far as leaders to the upside, I needed to restart my system, so I don't have that information for you. But let's just go to the general markets here, try to figure out what's going on. Let's begin by, first let's take a look at what's going on inside of the indices that are trading lower. So that's going to be the NDX 100 and the semis. So I just need to switch over to the proper page. That would make things a little easier for me to hold on a second. Sorry, I was just multitasking. Just get to the right spot, Steve. Get to the right spot. All right, so here we've got it coming up. We're going to go take a look at the NDX 100. We're actually going to take a look at the cash indice out here, and in it, what we're going to see is a couple different topping patterns. One, price moving higher, doing less relative energy, generating that bearish engulfing candle. A couple trading sessions ago, that confirms Rhodes momentum indicator signal. Price right now, and that was also a TD9 count. Price is below Stevie's green line. That number is printing at 10,727. You'll watch that. And he closed below that in the NDX 100, says it wants to move lower. Now, its breakout level, its key breakout level is 99.56. Now, we're going to switch here from the NDX 100. We're going to move over into the NQ out. Well, before we do that, let me just pull up the semis because this requires me to change screens. So let me do this here. We'll pull over the semis. What you're going to see here, same basic set of patterns. Now, in this actually, well, yes, you've got the, no. Well, yes. We can call this a Rhodes momentum indicator top. The bearish engulfing, if we take a look at not the prior candle, but the one before that, that green candle, certainly engulfed out there. Now, I'd be stretching the use of the bearish engulfing candle. We don't really need to do that, do we? No, we don't, Steve-O. Why don't we need to do it? Because it's got a TD9 count top out here. So, and this, its level of support, a key level of support, would be 1953.22. Any move below that would signal a change in trend. In this case here, a move back to 1746. So valid topping signals, but no key levels of support have been broken, either in the semis or in the NDX 100. Now, let's move over to the Qs, because the numbers that I gave you inside the NDX 100, those might be hit sooner or we'll have other levels to take a look at, and those are based upon the daily profiles out here. Well, inside the NQ right now, you can see it's got a bearish structured profile. What do you mean, jelly bean? What I mean, jelly bean, is that the center, and you're looking at panel 2 from the left, the center of the box, you're going to see 3 lines, a top at 10,862, a bottom at 10,272, and a center at about where we're trading right now, 10,660 or so. So that center, closer to the top, at the center you've got buyers and sellers. At the top you just have sellers, and at the bottom you just have buyers. So we know that in proximity is everything. In this case here, the proximity of that center line close to the top, that's why Stevie refers to it as a bearish structured profile. Now, if price can close below the center line out there, and I don't mean by a tick or two, but close well enough below it, that should signal that price moved down to the 10,272 level. A close below 10,272, 2 sessions in a row, would indicate a change in trend signal. If we take a look at the ES Mini, that's panel on the left, it's well above its daily profile. And so that looks bullish. It's above its trend line, descending trend line. The Dow is just slightly below its trend line, descending trend line. However, price is well above the top of its daily profile. It is bullish, and you can see the Russell 2000. It's moved strong today and ran right into resistance. Let me just pull this back just a tad more out here. You can see ran right into the resistance of its trend line out there. So those are its signals. Inside the NQ. Let's continue with the NQ, and let's move over to, so let me go take a look at this here, move over to my futures page, and as we pull apart the NQ, what we're going to find, well, I'm not sure we're going to find. I can't recall what we're going to find. We're going to pull it over here. So this is a 30-minute time frame. Now, on a 30-minute time frame, I didn't have any kind of topping pattern out here, prior highs being tested and so forth, and then the pullback. Now, this is really important. And this is extraordinarily important with regard to why you want to learn how to use the TD9 count. Not just to be able to identify potential tops and bottoms out there, but more importantly, to understand where breakout support and breakdown resistance is. This way, it's going to keep you trading by the numbers. And folks, this is nothing but a numbers game. Nothing but a numbers game. Markets go up and down, go pull back, move higher out there. But what does that tell us? Not a zilch, zip, the whole 9 yards out there. What we need to know is, where did price break out from? I guarantee you, no matter what breakout or breakdown system you use, you would have not picked 10,589.50 as the breakout level inside a 30-minute chart for the NQ out there. If you had picked it, wow, pretty amazing. No swing point, no nothing. Yeah, somebody might say, well, that was a wide-ranging bar, Steve-O. Okay. Then you got to tell me about how you're going to really use breakout levels for just those wide-ranging. Don't do that. You've got something that's objective. Objective. Remember, the 2-bar, a close below support, you need to have 2 bars. You don't want a one-hit wonder. Not that there's anything wrong with one-hit wonders. There's some great tunes out there that are one-hit wonders. But you're not going to make a fortune with a one-hit wonder, so to speak. Well, you might make a small fortune with the one-hit wonder, but it's not going to be recurring revenue. Use this. So what took place today as the market was pulling back? As many people out there might have thought to themselves, the market's given up the ghost. The ghost of what? All price did was pulled back and tested support. 10,589.50. Yeah, the reason we're focused on the NQ, that's the weak link in the chain at the moment. Learn your P's and Q's. Learn that TD9 count pattern. Real simple to do. Just subscribe to Mastering Probability. Do it for 29 days. You don't have to pay for a thing out there, and you'll have access to an extraordinary tool. Steve Rhodes with TFNN. You ready?
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the logical question, I would think the logical question, well, maybe it's not so logical out there, but the logical question would have been, as the NQ was pulling back to test support, Steve-O, what were the other equity futures contracts doing? Excellent question. So, and this is really how you put it together, because you want to be able to understand what's going on, in the different marketplaces out here, in the different. So let's take a look at the ES Mini. We already know that the NQ is pulling back and testing this breakout level of support. Did the ES Mini do the same thing? The answer is no. It's not as weak as the NQ. The breakout level, by the way, in a 30-minute time frame for the ES Mini is down at 31.42. No, instead, what the ES Mini was doing was it was pulling back and testing a key level of support, and that was its breakout level of support. That was the low of the European Open, based on the way that the ES Mini was trading for that 30-minute time frame. That's the blue horizontal line. So that becomes a support. The top of the, in this case here, of its opening ranges happens to be the top of the U.S. opening range at the 32.1475 level. So it closed above 32.1475. Right now we're trading in between ranges inside the ES Mini is going to tell you to expect and anticipate a further rally. So watch that level. The same thing was going on with the other charts, but I see we have a caller on the line. So let's go and speak with Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you?
Hey, Steve, I'm doing great. Steve,
Perfect.
With all the assistance that the Fed is putting into, keeping the markets up, do you still think that we'll get down to the March lows? I'm like looking at the Dow futures right now, and it seems like, there's another type of, I use a moving average on my chart along with other things, but it seems like every time on a daily chart, when the Dow futures got down to the 50-period simple moving average, it acted like a trampoline and acted like really good support, and we've always bounced up. So I try to listen as often as I can, but I didn't know if you still felt that we could get down and test the March lows.
So with regard to the Dow and the Russell 2000, my answer to that question is yes. But here's how you'll know, or here's how you should know out here. So I'm going to pull up the cash indices. Is that okay, Mike?
Sure.
Okay, so here's the Dow, because this way more folks can do this at home or on their system. They can at least go ahead and write in some of these levels. And what I want you to do, folks, on your system, what I want you to do is I want you to draw in a horizontal line from the low of May 26th. That should be 24,781.84. That is our breakout support inside of the Dow Jones cash indices. So right now, the Dow Jones has a TD9 count top out here. That formed on June the 8th. Until that gets taken out, we still have a absolute sell signal. When you get a sell signal, all that sellers really have the opportunity to do is push price down to support, see if they can bust through it. They did not bust through it the first and second time down there, that being June 15th. And June 26th. Now, price never got down all the way to it. It was close. No cigar out here. But a key level of support has not broken. Mike, if that level gives way, 24,781.84, that will be your signal, because there's no other breakout support inside of the Dow cash indice out here. So once that fails, then there's a free run to head down to those March lows out there. Now, that's coming on the weekly chart out here. Let me switch over and look at the monthly time frame chart. Let's get a bigger view and a bigger picture. And these breakout levels are really important. So as the Dow was moving lower in February out here, you can take a look at price had pulled back and tested support. Support was its breakout level of support, 19,677.94. Any close below that on a monthly basis is going to open up the door for 17,063 and 15,855.12. Now, if we were going to, you and I, if we were going to say, pick a line where the move higher inside the Dow was only a counter trend rally, we would choose, or I would choose, Stevie's green line. It's an objective level. And what we can see here is prices just simply bounced up into that. We traded into that earlier today out here, and prices rejected that. So at this stage of the game, my answer to that question, based upon analysis of the charts, is yes. If we take a look at the weekly time frame chart here for the Dow, I don't have any additional information at this stage, but so does that answer your question?
Yes, Steve, and as always, thanks so much for the added indicators that you've brought to the table. It enhances my knowledge and everybody else's knowledge greatly. It's great that you spent all this time and money and effort, discovering all these different techniques, and thanks.
Well, my pleasure. Now, for the Russell 2000, the number that it has to crack 1290.90. So that's its level. And if you see it close below that, then you've got to run all the way back down to the bottom. Now, today it looks like you're going to get it close above Stevie's green line, 1443.90. That has this, my oscillator and change line has acted as resistance. You can see this thing's been resistance ever since June 11th. But if we do get a close above it, well, that would signal that price wants to continue to move higher out here. In the NDX 100, we were talking about the NDX 100 earlier. I'm going to put this up on the screen. And you may recall from the Dow chart how on the monthly basis, price had come back and tested its breakout level. So when we put the monthly time frame chart up here for the, let me get to it, for the NDX 100, what we're going to, that's still on the daily. Come on, Steve, we'll get to the monthly. Let's go ahead and populate it. Sorry about that, Mike. Here, what we can see is price never made its way down during the February-March move lower. Oops, sorry about that. During the February-March move lower out here. Now, what so that is telling me that, and the breakout support would have been 61.64 out here. So the NDX 100 is an animal unto itself. It never even got down to test the breakout area. It's just telling us how strong it is. And the NDX 100 it's not giving me a signal that it needs to get back and test those March lows. Doesn't mean that it won't get back to 94.52 or may get back to test the highs of the lows or something like that. But it's really more the Dow and the Russell 2000. Now, Mike, I know that you like to do a lot of work yourself out here. And if you go back and you take a look at the charts at major tops, when the Dow lags, it's always bad news. It's always bad news. And the Dow right now is lagging. The NDX 100, is making new all-time highs. The Dow hasn't been able to take out the resistance of Stevie's green line on a monthly time frame. So that's also another message to us. And that message, Mike, is that the global flow of capital, the big bundle of cash that is floating around the world, doesn't have any confidence just yet, hasn't parked itself inside. And the Dow is their trophy horse, so to speak. And so that is another signal to us, and not get too caught up into this move higher, this rally out there. And yeah, the Fed's infused a lot of capital. Its primary focus was to stem the tide of the repo market out there, which it has settled. That repo market has settled down quite a bit. But the Dow cannot save the world. And this is a worldwide thing we're dealing with out here. That shutdown thing, where you shut down the economy. So that's my take, Mike, on what the charts are communicating to me.
Okay, great. And if I recall, the when we made the top around 2000, the Dow.
Hey, we're about to go to hard break. My apology. Just hold on, and we'll come back to you to finish it up after this break. We'll be right back, folks. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Mike, we're on the phone with Mike in Ormond Beach. Mike, I didn't, we're going to that break there, and I didn't want you to get cut off. So my apology, but go ahead and take it from here. Yeah, I was just kind of agreeing with what you said that, the Dow topping, before the NASDAQ. And I'm looking at a chart now of when the Dow topped before the NASDAQ top was in March of 2000. Yes. Correct me if I'm wrong. But the Dow topped before that. And, yes. I can see what you're talking about now that, Yeah. What we have to do is, we're kind of U.S. centric in our thinking, right? Because when we pull up our charts, maybe we take a look at some international markets, so to speak. But most of our thinking, it's done in our currency, U.S. dollars, and the reality is, we can't think like that if we want to understand the markets out there and the real message of the markets. And that's why we take a look at that larger global flow of capital out there. And when we understand that, we understand just simply how connected we are, then it starts to make sense out there. And what that global flow of capital, and I don't know, I have a different name for it or what have you, but it continues to always, it has since the beginning of time. Since the beginning of time, with or without stock markets. You don't necessarily need a stock market, right? Because, we go back thousands of years. We were an agriculture market out here. In fact, in the U.S., we were an agricultural market into the 20s and 30s out there. 40 to 60% of our GDP, of our revenue, of where employees worked was in that market out there. So if you go study worldwide markets, you go back to 300 BC with into the Mesopotamia time out there. You see it actually in action. And what's great about history is you get to go back and look at it and understand where capital was moving to. What we find out here, the cool thing is that prior to every major war out here, whether you see capital flee that area. It doesn't want to get caught up in a war out there. So you'll see capital flee before the war actually begins out here. So just taking a look at the markets overall and globally is really, really helpful. And at this stage of the game, we just have to remember, at least up until this point in time, the Dow has been the trophy horse for that global market. And that's why when the Dow tops before the other markets out there, that's the signal of something more sinister to follow out here. And that's the current patterns that we have in place. All right. Well, thanks again, as always, for the education, Steve. Hey, you bet. Nice to talk to you. Have a great day. That was Mike in Ormond Beach out there. We've got a request from Stevie W. And Steve wants to take a look at IBIO. That's the ticker symbol. That also is the name out here. So I don't even know how you'd pronounce that. We don't need to. We'll just call it IBIO out there. And this is trading, Steve-O, inside its daily profile. So your resistance level 270, your support level 192, above the weekly and above the monthly profile. So those are bullish. This would suggest to me, since the profile is neutral out here, that price should be able to get up to 270. So that becomes the target. Let's go switch over and take a look at our other charts and see if there's any other messages that IBIO generates for us. So trading right now at about 250. As we said, the target looks like about 270, the top of that daily profile. As we look at the daily time frame charts, I don't have any kind of topping signal or anything along those lines. So that supports the continued move to 270. If I look at a weekly time frame out here, bottom with a nice big hammer, wave number 7. That was the letter G. So that was the bottom out here. Nothing on the weekly time frame to suggest that price, other than that price wants to move higher. So that's confirming that message. The monthly right now, Steve-O, trading above 229. 229 was a TD9 breakdown level. So it closed this month above that. and then a close next month above that is setting up a move to 547. So it looks like the 229 area is really a key level for you to watch. So best of luck with that. I don't know if you're in that trade, not in the trade, but at this stage here, that's what the charts are communicating to you and I with regard to that specific instrument. We've got a request out here from Paul K. Paul wants to take a look at oil and the USO. So let's go take a look at light sweet crude, try to figure out what it is doing. So we'll get back to now, just in case if you're not a subscriber out there, just to give you a feel for charts that subscribers get each morning, because people are trading all kinds of things out there. So my objective, my purpose is to provide you with the information that you need to know, especially support and resistance, patterns that are in play out here, and where price is likely targeting. So we take a look at people see charts like this. They see the gold chart. This helps them. They see the silver chart. This helps them. I'm going to get to it. They see the copper chart out here again, and there's always commentary with regard to what to be looking at. Here's the chart for platinum. Here's the chart for light sweet crude. So, Paul, we're finally to what you would ask for. So in this case here, we've got the August contract for crude oil. That's slow. That's moving over into September out here. So at the bottom, so the top portion of my screen out here, Paul, you've got the basically you've got we run through March of 2022, and you can take. I've even got all of the market profiles for those contracts out here. But right now, price is breaking above. Let's go focus on the. What should we focus on? Should we focus on the September? Let's focus on the September contract for light sweet crude. Now, you asked about USO. I don't know what's inside USO, but let me on my other screen here. Let me get the other chart here for light sweet crude going, because I want to be able to try to identify wherever resistance might be. So that is populating as we speak. Let me pull it over. So the September contract, you're trading at 41.37 out here. So let's expand this out. There we go. Expand. Go ahead. Expand. Okay, I'm using my David Copperfield. I'm saying expand. So I'm actually clicking this, and I'm not getting anything to expand. That's a bummer. What the heck is going on? There we go. Okay, you know what it is? Oh, it's all these time frames. It's just trying to update everything. So as we take a look at the September contract for light sweet crude, price just trying to trade above Stevie's green line. It's really at it right now. That would give us a nice little breakaway signal out here. I don't have, as far as its price target, I don't really have a good price target to provide to you on the daily time frame. So let's move over to the weekly, see what the weekly tells us. The weekly tells us that if this week, by Friday, price closes above 41.74, then this week would generate bar number 9 of a TD9 count. We know that bars 8, 9, or the bar following 9, as long as one of those 3 bars is the highest high of the pattern, that identifies, that qualifies for a TD9 count top. So light sweet crude could be setting up that top. It could be this week or it could be next week. The key is this week or next week would be trading above the high of bar number 6, and that again is the 41.74 level out there. And then on the monthly time frame chart, the counter trend rally would end at about 41.80 out here. So, Paul, that's a light sweet crude. Looks to me like it wants to continue to move a bit higher out there, but that bit higher could trigger a weekly TD9 count topping pattern. We get back to this break, we'll go take a look at USO. Steve Rhodes with TFNN.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So for Paul K., we were taking a look at Lightspeed Crude. We looked at the September contract there. And Paul had also asked if we could take a look at USO. So, Paul, here, when you take it's so important to understand what is inside that ETF out here. And here are the holdings as of last evening's close. And what you're going to see out here is when it comes to the commodity aspect of the holdings out here, the Lightspeed Crude contract, it's really split between October, September, December, November of 2020, then you get June, January, February, and August, or February of 21. You've got August of 2020 out here. You can see cash is just being held in T-bills out here, obviously to be implemented to go ahead and then you've got the Goldman FS government instrument, likely again just a really like a cash type of an instrument out here. But I can't do that during the show. This is what you need to do. If you want to make an investment in USO, you can't be taking a look at what the current contract of, well, you can do that, but what you're going to do is you're going to start asking questions. Well, how come, this contract, how come Lightspeed Crude looks like it's going up and USO is pulling back? Well, it's because the current contract maybe only has less than 20% of the holdings inside of it. So I haven't done the math on this, but you can do this. This is USCFinvestments.com and the holdings, and you can get there and do that. And that's what you would really need to do yourself justice if you're going to go ahead and invest inside of USO. So hope that helps you out there. But that's really the work that needs to be done. We've got a request here inside the Tiger's Den from Ruby. Ruby says, when Ruby says it, we listen. Ruby says, I'm long Russell 2000. The last resistance I have was 1468. Do you think it's a good idea to keep it overnight? Well, it's a great question. I probably will know more at the end of the day than we do at 144. But here, if we take a look at the Russell 2000, here is the future contract for September out here. And this is where you just need to make your decision out here. Price has moved higher today and it ran right into resistance, which is a descending trend line out here. You'd feel more comfortable if price can close above that level. That level would be about 1480 or so. So it's above your resistance level that you've got at 1468, so to speak. I'm not sure where the 1468 is coming from. That doesn't really matter. That's neither here nor there. You're asking me to take a look at it on my chart. So you'd feel better if price was able to do that. But price is above the top of its daily profile, so there's nothing wrong there. If I take a look at the short-term time frame charts out here, which you know we're going to do, the 30-minute time frame formed a TD9 count top as well as a Rhodes momentum indicator top. This is the beauty, folks, whomever, everybody, of why you need to know where support and resistance is, just like Ruby is out here. Because so you get that top. We got two topping patterns out here, 30-minute time frame. All that sellers have all that they have the right to do is to push price back to support, especially in a market that's moving higher. These are just normal retracements out there. Normal retracements. They may look large. They may look gargantuan. But the average true range out here on a daily basis is what's large. So the retracements are just a aspect of that. Price pulled back, Ruby, and tested support, 1455.80. And if price can close above the top of that daily profile, looks like about 1474 out there. This is a bearish structured profile. This formed after the TD9 count topping pattern. So that would be a positive for you. And I would say if price can close above today's high, that would be the other positive for you that would say, okay, go ahead and hold it overnight out there. Now, your problem might be is that, is the NDX 100. So the NDX 100 is not participating. What does Steve-O mean by that? Well, if we take a look at the NQ out here, topping pattern, Rhodes momentum indicator top, TD9 count top, and today's rally has only been able to make it up to Stevie's green line, which is 10.734. If the NQ can close above 10.734 today, then that would say, okay, a further rally should ensue, and then you might want to hold it. If it doesn't, you got to be aware of that topping signal inside of that NQ out there, and you may be better off to, if you're in front of your computer, after 6 o'clock and maybe before you go to sleep, that's how you really gauge the market out there. So I hope that helps you out. Let's go to John in Orlando. John, thanks for calling. Thanks for holding. How are you today?
Hi, Steve. How are you?
I'm doing very well. Thanks so much for asking. And the S&P 500 is what you're interested in. So tell me what you're doing, how I can help.
Today, I went short the SPY.
Okay.
The options. Yeah, the July 31st options. The strike price is 320. 320.
Okay, so here's what you're looking for at the end of today's session. What you do not want to see, I'm going to give you the ES mini number. Is that okay? Do you have access to see that? John?
I'm driving. No, I'm driving.
No, not right now. But you got access at your screens so you can see where the ES mini closes? Perfect. Today,
I do.
Great. If today the ES mini closes above the high from 2 days ago, that number is 32.2625. You may not be on the right side of the trade because the ES mini will have closed above a resistance level, will have closed above its two topping signals out there. And what that might be signaling to you is it's getting ready to make a move up to 33.96. Until the ES mini closes below 31.84 right now, the trade is somewhat suspect. I see the reason to take it, most certainly, but then I also see the reasons to be very cautious right now. Price is trading above the top of its daily profile. It's above some descending trend lines, which you can't see. You get that if you take a look at the replay. When you are in front of a screen, the New York Stock Exchange giving us a bullish message today right now with its advanced decline oscillator above zero. You've got the spot volatility index well below the 50-day exponential moving average. That's at 31.73. It's trading right now at 28.67. Those are all indications of a market that wants to move higher out there versus lower. That's the bigger picture. So how would you trade it? I think it'd do just as we took a look at, come towards the end of the session out here, watch the levels that I gave you, and then you should know whether you're totally on the wrong side, technically speaking, or whether you might still be on the right side of that trade.
You said it's 32.25 or 32.26.
I'm going to pull this back over here again. Yeah, give me one moment. It's going to be the high, just so that we're clear here, it's going to be the high of July 13th. So you go back and you take a look at that. What I've got for that high is just waiting for my screen to give it to me. Come on. All right. I have another way to get it. Give me a minute to move over to a different screen. Not sure what was going on. I appreciate the patience out here, but I want to give you the exact number, the right number, and that number is going to be 32.2625. 32.2625.
Okay. That was wonderful. Thank you, Steve.
Yeah, you bet, John. And best of luck. Thanks so much for calling. Let's go to Robert. Well, I tell you what, we're going to go to Robert in Overland Park, Kansas, when we come back from this break. I know he wants to take a look at natural gas. Robert, have your question queued up because we're going to be doing the 2-minute wrap, and I want to be able to get to your answer out there. And that's with regard to natural gas. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Robert, thanks for holding during that break. I know you want to take a look at natural gas. Tell me how I can help you.
Is it a good time to take enter a long position in natural gas?
What's your timing? What's your time frame outlook that you're looking at?
Daily time frame. I'm holding it for a few days a week.
So here's the contract's rolling over into September out here, which if you're watching on Tiger TV, that's going to be panel number 2 on the bottom from the left out here. And so natural gas has a bearish structured profile on its daily time frame. The September contract is trading right now at 181, and the top of that bearish structured profile is 184. So I would never have you enter a long position now when you're so close to resistance out here. If price does close above it, okay, well then I was wrong. But that would be nothing more bullish than a failed bearish kind of a pattern out here. So I would hold tight. Another reason to hold tight at this stage is here is the September contract for natural gas as well, and on a monthly basis we can see that price is still below Stevie's red line. That's priced at about $1.93 out here. So I would make that trading decision based upon the profiles. If I just went to the August contract out here, I would say now would be a good time to enter. But because we're rolling out here, I would say you've got to wait and either for a pullback to 1.691. That would be an entry point, or on the breakout. Being so close to resistance in a bearish structured profile, I'd have to say now is not the time. Okay?
Thank you.
Robert, do we have?
Yes,
okay,
thank you.
You bet. Thanks for calling. Hey, all the folks that, there's about 2 or 3 folks that sent in some requests. Johnny, Wayne, Jared out here. I promise I will go ahead and take a look at those instruments. I see Brent sent in a question. I'll take a look at all of those requests during tomorrow's show. Stay tuned for 2 more great hours, folks, and have a wonderful Wednesday. We'll see you on Thirsty Thursday. Take care.